Antara for joining in with all those exclusive details. Apart from Jet Airways, which is having a terrific run, it's Mindtree as well that is in focus today. And remember, it has been a tug of war, so to speak, with Mindtree and L&T as they have alleged that hostile takeover. But now the latest with respect to Mindtree is that the board is going to be meeting again today, and you will also have at the same time a meeting which will be with L&T. But in that Mindtree board meet, they are going to consider a share buyback. Remember, L&T first needs to own 26% stake to make an offer for the Mindtree equity share to get a place on the board in order to give them their ability to block special resolutions. And they intend to do this through open market purchases. So the board is going to be meeting, and you also have L&T who plans to make a detailed public statement on the open offer for Mindtree shares, and that is going to take place today. Not just that, you also heard out on ET Now, Rastha Ravanan speaking, and he was saying that they are getting very supportive reaction from clients. There is no difference of opinion with the board. As of now, they're trying to minimize business disruption, but they don't know how long this is going to take or how the overall scenario is going to play out. Mindtree for you at 938. Away from that, let's focus in on a heavyweight then, and that is HDFC. Currently quoting at about 1933. Kunal, from a technical standpoint, what is the reading on the charts today?
Third consecutive day, Avan, for the stock to drop from 2010 levels to now 1933. So it's a fall of almost 5%, and HDFC and HDFC Bank both have one of the highest weightages on the Nifty combined as well. So the weakness into these stocks does not augur well for the benchmark Nifty as well. But when you look at it on the short-term charts, the stock is at a very crucial 50 DMA support. It's exactly at that 1930 mark where the stock has taken a bounce from intraday levels as well. So this is now a very crucial level or a litmus test for HDFC. If the stock breaks below this 1930 mark, which is the 50 DMA, then I believe you could see some bit of more selling, maybe a 5% drop in the next 1 week odd. But if the stock takes support at this 50 DMA, then you could see a reversal of sorts on the indices as well as on the stock.
All right, that's the take coming in on HDFC. 3 straight days on the trot that it's down. Meantime, Vodafone Idea currently at about 29. Hemant, what is your assessment as to how much more downside we could see here?
Well, good morning to you, Aman. Frankly speaking, we remain in a short, medium and long-term downtrend, Aman. Frankly speaking, it's a sell-on bounce. Near-term oversold situation, we have seen a couple of bounces, but sustainability still seems to be extremely slippery. So it's a sell-on bounce, Aman.
All right, a sell on a bounce, that's the word coming in on Vodafone Idea. Well, let's move away from telecom then to IT, and Tech Mahindra was in focus. And generally, IT companies have been on account of the way the rupee has been shaping up. So we wanted to question the management of Tech Mahindra on their outlook on margins, the deal wins, as well as the overall digital foray. The management said that as of now, rupee appreciation is not going to impact the margins on a full year basis. On a sequential basis, yes, you may see a movement. They've just recently undertaken a buyback, and they said they will continue to reward shareholders via buybacks and dividends on a consistent basis. But do remember, there's that window of 1 year post which you cannot undertake a buyback. As of now, they're looking at M&A to augment their capacities, to increase their presence. They will continue to invest in IT, tech transformation, and they're very confident on growth that will be very visible next year, as there is no contraction in their traditional business. Digital contributes nearly 33% of the overall revenue pie. That is Tech Mahindra for you at 774. Away from that, at number 6, and the big news maker from real estate is the biggest real estate player who has undertaken a QIP issue, and Soumya, it's of large size.
Well, yes, Aman. In fact, the QIP opens today, and they're selling close to about 17.3 crore shares on approximately 10% stake, and are looking to raise close to about 3,000 crore rupees via this QIP, and the offer price is being at 183.4 per share. Well, the company says that they're raising this money in order to reduce the debt levels of the company. So the stock is gaining and is up by approximately 8%.
Oh yes, indeed. That one is showing a lot of muscle in trade today. Remember, promoters compelled to undertake this move will reduce the debt burden quite substantially. No wonder then. Meantime, let's move on then to stock number 7, which is Indiabulls Housing. From 713, the stock has beefed up quite considerably, and this one has been on the radar of late. Kunal, what exactly is the undertone, or what exactly is the underlying trend for Indiabulls Housing?
So one of the key points over here is that Indiabulls Housing Finance stock has been a clear underperformer when you look at this in context of the other mid cap and as well as large cap names in the same space. But on the short term charts there are some indicator patterns getting formed, some bit of volumes picking up, price action nearing a consolidation breakout, and that I believe suggests that maybe you could see the stock catching up. The entire space is doing pretty well today. You have many stocks from similar spaces rising up 3 to 4% odd on an average. So I believe Indiabulls Housing could also see some bit of a short term breakout. 775 is a target which I would recommend a buy with, and stop loss to be kept at 705.
Important technical levels to map out on Indiabulls Housing. Meantime, it's Reliance Industries, and they sure are suiting up. The latest news is that they have acquired the mid-segment menswear brand John Players. This is from ITC. The consideration details are not out, but it's understood to be about 150 crore rupees. This is going to add nearly 350 crores to their value fashion business of Reliance Retail, which is carried out via Reliance Trend and Agio. It's going to strengthen their ready-made garments, accessories, fashion and retail business. It's going to be the brand and distribution rights of John Players through 750 stores and 65 exclusive franchise outlets. So clearly, they're beefing up their presence not only in telecom but in retail as well. 1344, that's where RIL is at. Moving right on then, let's pull up some mid-cap movers as well, and it's Minda Coop that is grabbing eyeballs from the broad end of the market. And Hemant, you have a hold?
Yes, Avan. So stock hasn't gone anywhere for the last 15 weeks or so. Having said that, from a slightly shorter term point of view, it's in a short term bounce. The intraday mechanical indicators have signaled a buy from an oversold zone. So I'd hold with a stop loss of 131, near term target of 140. Medium term picture remains completely flat, Avan. It's gone nowhere in the last multiple weeks.
Level coming in on Minda Coop. Meantime, at number 10, it's ICICI Pru, and Soumya, this too is an ET Now exclusive.
Well, yes, it's a confirmed ET Now news break wherein the joint venture partner Prudential is looking to sell 3.7% stake via offer for sale. Well, remember, Prudential holds close to about 29% stake in the JV. Well, this offer for sale would include 3.7 crore of shares with an option to additionally sell 1.6 crore shares, and the floor price has been set at rupees 300 per share and would fetch Prudential close to about 1600 crore rupees. Well, the offer for sale for the retail investors would open on March 27 and for the non-retail investors would open on March 26th.
Okay, those are all the latest details with ICICI Pru. On that note, we have to take a short break. Stay with us. The countdown continues on the other side. Just about flattened out on the equity markets. Welcome back. This is Market Fatafat with a negative bias at that. Let's just pull up the indices to see where you're getting a little bit of pressure kicking in. Well, there's IT, which has been a sore loser. That's down 1%. FMCG is quietened out. Now even the auto stocks are looking a little bit tempered at this juncture, while Realty PSU banks continue to hold fort. Well, let's keep it with more buzzing stocks then. And Kunal, what are you looking at by way of levels on Union Bank today?
So PSU banks are buzzing, and we've seen volume, price, both moving up in a synchronized manner for many of the PSU banks. For Union Bank, the reason for highlighting this is that this is one of the other names on the mid-cap banking side, which has given a breakout on the short-term charts, trading about those 89.5 levels. I believe Union Bank could be a good bet from a short-term view. 94 to 95 could be a target range for the stock price, and stop loss at 87.5 if you're looking at a fresh buy from current levels.
All right, that's the take coming in on Union Bank, which is flaring up in trade today at 90. Meantime, Kalpataru Power, let's get in that stock then. And Soumya, walk us through the news.
Well, Aman, talking about Kalpataru Power, it's acquiring 85% stake in a Swedish firm, LMG, for an approximate value of $24 million US. Well, this acquisition is expected to expand the company's presence in the Nordic countries wherein they have no former presence, and this transaction is expected to close in the first quarter of FY20. The stock reacting to this news flow.
Oh yes, indeed it is, holding out by about 1.5%. Meantime, let's keep it with stocks which are on the brokerage radar, and there's BHEL that's in focus. Credit Suisse has a view, and they're saying largely this is Neelkant Mishra's view on the equity markets, and he believes that it's a non-consensus overweight call, and in key overweight in the industrial pack is BHEL, so watch out for that counter. At number 14 then, it's clearly the oil marketing companies which is seeing a very smart synchronized move. Today is no exception. Although some of these stocks have come off a tad, Hemain, do you think that the underlying trend is very positive here, or have they run their course?
Avan, from a very near-term point of view, I think they might have run their course just a wee bit. Coming back to IOC, stock is getting slightly overbought. Like you said, it's come off from its intraday high. We moved up for 7 weeks in a row as far as IOC is concerned, Avan. So I have a feeling it's susceptible to a correction and with an overbought situation. So I would suggest partial profit booking.
All right, that's to take partial profit booking on IOC. Meantime, Edelweiss as well is another stock that's in focus. What does Morgan Stanley, so I may have to say?
Well, Morgan Stanley is maintaining their overweight stance in the stock with a target price of 235 per share. Well, they say that Edelweiss along with Indostar continue to make positive changes to their business model in order to respond to the ever-changing market environment. Well, they've raised their target for Edelweiss by approximately 15% to 235 per share.
All right, watch out. That's the latest coming in on the stock. Meantime, let's keep it with consumption. There has been an acknowledged slowdown in the space, but there's no slowdown in the stock price of Nestle today. Where exactly, Kunal, is the stock headed from the current juncture? 100 rupees higher today?
A very interesting pattern breakout on the hourly charts. It's more visible on the hourly charts. There is an inverse head and shoulder pattern formed across the last 3 weeks of price correction. And then when you look at it on the slightly shorter term time frame, say 1.5 odd week, there is also a triangular pattern breakout. Now 10,700 to 750 is the breakout point for this price pattern or double price pattern on the stock front on the hourly charts, and I believe if the stock confirms this breakout, it could head towards almost a 700 to 750 point up move post that. So 11,500 is where I believe that the stock should be heading over the next 1 to 2 weeks. I've I've recommended a buy on this, and stop loss could be kept at 10,350 levels.
10,350 is the stop loss, a thumbs up. That's the take coming in. 11,500 on the cards for Nestle. Meantime, at number 17, GIC is in focus, and the national reinsurer is increasing the premiums payable in 8 industrial categories where you have seen high claims, manufacturing rubber goods, plastics, textile, chemicals, etc. And they have asked general insurance companies to add the cost. GIC RE, that is, the state-owned reinsurer, have asked general insurance companies to add the cost of the management to the IRB-defined rates and accordingly to provide quotations for their corporate clients. Moving on, at number 18, then, it's Ashok Leyland. In a bit of a weak spot as we speak, the stock is at the lowest point of the trading day. Hemain, do you believe that there is more correction in sight?
Yes, Avan, very much possible. The stock remains in a short, medium, long-term downtrend. We saw a move from 77 to almost 95.5, and that has run its course. So, frankly speaking, a bounce from the oversold situation hasn't helped much, and the overall structure still remains negative. So, I would have a sell on bounce, notwithstanding a minor pickup.
Fair enough. That's the view coming in on Ashok Leyland. Meantime, Soumya, NTPC, and we're clearly seeing a lot of fervor in some of these select power utility names. CLSA also has come out with their reports. They're very bullish.
That 4 new plants worth $3 billion would start generation in next 6 days, and it will drive 15% year-on-year growth in regulated equity by end of FY19 versus 3% in third quarter of FY19. Well, they say that they're getting closer to lower under recoveries, and the robust regulated equity growth will expand the ROE by approximately 250 bips. They're maintaining a buy stance with a target price of 157 per share.
All right, there you have it. That's the take coming in and a good 2% on the stock. Meantime, Pidilite is having a fairly good run. Kunal, are you buying into the momentum?
Looks like, Avan, I think the stock should continue to ride on its momentum. There is a strong breakout. Earlier the stock was at a multi-swing, high kind of a pattern, but now I think it's confirmed even a 52-week high breakout. So I think, the momentum just about keeps on continuing for Pidilite, and the stock should climb back towards that 1250, 1255 zone. So a short-term trader can look at a hold on Pidilite. 1255 plus could be a target range in the near term.
All right, clearly it's a strong up move that you're seeing in the stock, and Kunal believes that it's here to stay. Let's move on to Raymond then, and it's a textile major, but they're venturing into real estate development. They started a new division, Raymond Realty, that's going to drive growth plans within the space. And the company's 125-acre Thane Cadbury Junction land parcel is what they are looking to monetize through their new business venture. In fact, they've carved out a 20-acre land parcel of the total holding, and they are looking to develop nearly 3 million square feet of residential projects. That's the latest coming in on Raymond. And moving on then, Z Entertainment, it continues to remain a stock in focus, but what exactly is Credit Suisse saying in their latest note, Soumya?
Well, Credit Suisse says that they're maintaining outperform stance with a target price of 560 per share. They recently met Mr. Goenka, the MD of the company, wherein he reiterated his stance on attractiveness of the business, and they see near-term headwinds for the revenue growth. The company is likely to continue with elevated investment and digital. Stock up by 2%.
Oh yes, indeed, at 425. Moving right on then, Tata Power is a stock that's in news as the company has said that its arm, that is Coastal Gujarat Power, has inked a share sale pact to sell 100% stake in Energy Eastern to Trust Energy Resources for close to $10.9 million. In fact, it's expected to be completed by 31st March, and Trust Energy Resources is a wholly owned subsidiary of the company. Let's talk just about quiet as we speak. Moving on then, ICICI Bank at 386. Heyman, a lot of people on the street have been betting big on this stock. Do you see some sort of a decisive trend on ICICI Bank?
It's going to take some time, Avan. From a very couple of days point of view, hold with a stop loss of 383, target 396. Positional, I would be more comfortable. We walked into a corrective phase. This could last for a week or two, Avan, but from a positional point of view, we are consolidating between 380 and 400. I'd look for a target of 420, but this would be a 3 to 4 week view. Currently, hold.
All right, that's the word coming in. 396 is the kind of upside as of now. On that note, Heyman, Kunal, as well as Soumya, great having you on board. Thanks so much for joining in on this edition of Fatafat. We'll wind it down on the show. Stay tuned for markets at noon coming up after a very short breather.